And good afternoon. This is the Elliott Wave daily update for the NASDAQ 100 being recorded on Thursday, October the 2nd, 2025 at 2:15 p.m. Pacific Daylight Time. I'm here on the hourly chart and I kind of want to go over because you can see all kinds of lines and connections because I'm actually displaying both the preferred and the alternate here. So let's kind of dive in. So my preferred remains that we're in within the minute fourth wave coming down. And there is wave A, minuet wave A of minute four. And the B wave may have completed today and as an irregular. I just went up directly and hit both the 1.236 and the 100% for the C wave at 25,179, with that high being 25,180. So it fit to a T. And then right off of that, one moment, the market decided to turn and just drop like a stone. Now, that pretty much, I think, was based on Tesla, which pre-opening traded as high as 479 and started to come back down. And I thought, oh, okay, that all makes sense. But I had forgotten that it also was throughout the day would be auto sales. So I guess when it was Tesla's turn to discuss auto sales, they lagged in being competitive with their partners, right, or with others that are reporting. And it just tanked the stock. The stock ended up dropping on the day 23 and a half. And of course, they're buying it up a little bit right now, but still um, down substantially off of that initial high. So that did contribute a lot to the S&P, along with we saw some wrestling around on some of the other stocks. Netflix continues to get hit. Microsoft continues to get hit. So, but at the same time, there was some strength being shown in Apple, AMAT, AMD, Amazon, Broadcom, Google, a little bit softer in Google, but Intel, Meta. So again, I think we're still seeing rotations coming in and out of for now that we're in the fourth quarter. How do they want to go forward with the whole thing? So that's all just kind of the equity side of what was really creating some of the scenes today. Now, 1, 2, 3, 4, 5, completing that C wave. Let's bring it down to that 15-minute chart. I want to take a look inside this thing. And I'm going to open it up. So I definitely kind of want to think that I can get five out of this. But on the 15-minute chart, to be honest with you, it's it's a stretch because I'd have to say one, and look at that very small two. It just, I don't like it. So it kind of comes into one, two, or A, B, C. And then we're starting to move up again, not with tremendous strength. So it's not going vertical. It's now just kind of more just like walking itself higher. And that could still be a part of, I did notice that there were times today when I felt that the risk on trade was more in continuing. So I was seeing that they were selling the VIX, that the futures market, although it did close with a slight gain on the day, as it should. Um, but there were times I felt that they were selling it, in which case then they were coming back in and buying the underlying volatility within the NASDAQ component stocks. So, but that being said, if it indeed is three down, then I'm going to have to go with the fact that maybe this three is all the way up here and this four can go over here. And we have one more additional high to put in to finish the B wave. That's one thought. The other is that this can be pulled in as five, and I can go down to the 5-minute chart and I can open that up and we can take a look. Now I got a little bit more to work with. A little bit more. Not a whole lot, but a little bit more. and we can come all down. But you can see it really was. They hit that high and it just went down. It just went down. So we don't really get anything significant in terms of what it was doing. And I can take it down, which I've already done, put it on the line chart. On the line chart, what's it look like? A, B, C. So I'd have to somehow get it into my head that I got a 1, 2, this is 3 to 4, and that's a 5, and I got 5 down, and this is going to be an ABC up. It is a possibility. Now, as an Elliottian, as someone who's like trying to count the individual waves, I'm down to a 5-minute chart and still having trouble making this 5, or even like 1, 2, 3, and a 4 and a 5. So, but again, I am not saying that that's not what happened. I'm just saying that I don't really like it just yet. So again, I'm going to let the market kind of show us what is really kind of at play here. Let me see if I can. It's not going to do it. So I'll just do it for it. See what we can get out of this. Now, let me just go back out and let's take a look at that hourly chart and try to determine what we have. Now, in terms of the alternate, so those of you that look at the S&P and the NASDAQ and listen to both of these videos, in the S&P, it put in this weird move right here where it went to a new high over in this sequence. So, and that just it presents problems in the S&P. Not so here in the NASDAQ. So here in the NASDAQ, that's 5, and that's the 5, and that's the minute 3. And now coming down, we've got the A wave. We have the A of B, the B of B, clean. An ABC down, clean for wave B. And then 1, 2, 3, 4, 5. Now, could be, honestly, 1, 2, 3, 4, and we've got the 5 here. Now, if that's the case, then we are going to make a new high above 25,180, current high. And our next level up is 1.382 at 25,262. And that keeps it still within a B wave. Now, let's walk over and take a look at what could be if it is the alternate. And the alternate would suggest that this is 4. Minute wave 4 here. And we're working our way higher in a minute 5th wave, which is going to complete minute wave 5, minor wave 5, intermediate wave 5, and primary wave 3. Very possible. Now, not my first choice, though. I still am of the opinion that it's a B wave. Irregular as is, but it's a B wave. And we're going to come back down and then still spend time putting in my new 5th wave up to complete that whole cycle. Now, also, I just want to say I was running some algorithms today, just re-asking the same questions about, hey, what are we looking at for the year end, and what about this surge, and what about the upside, and trying to put more definition around coming into earnings season, coming into we have not one but two between now and December. We have 2 Fed meetings. And of course, now everyone wants to go and hang their hat on. Well, the Fed did say they'd probably cut one more time this year. I don't think so, but it's what people want to put in. So you have to include that in your calculations on the possibilities. So it has changed a little bit. What I'm getting now is changed a little bit. And we're also looking at the right tail, left tail type stuff, and I'll explain all of that. And this is really great information, and it's a little bit more technical, but I'm going to present it tomorrow or Saturday, the latest, in the podcast that I make to do the weekly updates. So it's not going to be one that you want to pass by, because I think there's going to be a lot of very useful information for moving forward on what our potential is, and we can stick probability numbers on each scenario. And again, I actually built this around the Qs rather than the NQ and the NDX. Reason being is because the gamma levels that are very important to how I view the market and for trading is much more prevalent in the Qs than it is in the NDX and the NQ combined. Reason is because there's way more options that are trading in the triple Qs than in the other two combined. So it makes sense that if we're looking at gamma, which is produced through options positions, that we stick to the Qs. And quite frankly, today, it was the Qs that gave us the clues quickly, quickly on this drop that we had. I mean, there were several levels. Now, the gamma levels that I'm using basically was just one. But there are others that you can fill in some of these blanks. And it was very interesting. So I'm going to continue to just add to this conversation, and I think it's going to be valuable. Now, back to today. So what I'm going to look for here is that I actually would, let me go back down to that 15-minute. I'm very on the fence of saying 1, 2. Now, if it is, this is an ABC up. That's A, B, 1, 2, 3, 4, 5. We really shouldn't be spending any more time heading higher. We definitely should not break that. It could happen, but I'd be looking for 1, 2, looking for a third wave. It needs to kick in, start dropping, and not look back. And that's serious because it's a third wave, strongest and the longest part of a 5-wave sequence. All C waves must be 5. This would be 1, 2. We're down in the third. And I'm thinking that third should be breaking that and just keep on going. It should be a powerful move if it's going to unfold. We still have a lot of stuff out there kind of churning around. Now, here's the other gig because tomorrow we should be getting the unemployment numbers, right? The U.S. employment data, the non-farm payrolls, etc. Not going to happen. Why? Because the Bureau of Labor Statistics is the department that puts it out, and the government is shut down. If you notice today, and I even said it twice this morning, that hey, let's be aware we've got the initial jobless claims to deal with, and they didn't come out. And we had construction spending, I believe, it did come out, did not come out. Both were delayed. Both were delayed. So construction spending delayed, and then we also had, well, that was actually yesterday, construction spending was delayed. Today, it was factory orders were delayed. Initial jobless claims were delayed. So tomorrow, we're getting U.S. employment. What will come out, and I believe will still be, we'll get it, are the S&P 500 U.S. Services PMI and ISM Services PMI. That's 9:45 and 10 a.m. respectively. I think we'll get those, plus 1, 2, 3 Fed officials out giving speeches. So we'll have plenty, but the most important one for tomorrow, I doubt we'll get. Unless somehow they manage to get it together and pay the person that's going to come out or just put those numbers out. I don't think we'll get them. Doesn't mean that they might not show up, a day or two after all of this stops and we force all this data onto the market. But right now, I doubt we're going to get it. So what could actually start to propel the market to go down? Well, we'll have to look at something else. And so I'm just also, yeah, here we go. So now we get to this is the important stuff. Applied Materials expects a 710 million revenue hit from the new export rule. Okay, how's that going to affect their bottom line? They're expecting a 710 million hit. Well, if that's AMAT, what about the rest of them? So again, when we're looking forward to earnings, what could we begin to see? More effects from what the tariffs and these new rules and all this other stuff, how is that going to affect our U.S. companies? Interesting, to say the least. So again, I think we'll continue to prepare. But if we're going to come down in the third, I'm looking for a lot of weakness coming out of this market. And we might start getting it back in NVIDIA. We might start getting it again in Tesla. We might see Apple start to soften up a little bit. Again, right down the line, we might see it. And just out of this to tell you that news, AMAT closed at 223, 215 bid at almost 216, 215.66 at 215.98. That's down 8. What else is going to happen tomorrow? Who else is going to come in and say, you know what, that's going to affect us as well? AMD? Broadcom? Possibly. Microsoft? Possibly. We got a lot. We'll see. So, yep, there are things out there that could start to drive the market lower. We are overbought. We have been sincerely overbought for quite a while, even though on this 15-minute chart, I got a lot relieved today. But we did do that. They turned around. We got done with that, and we thought, okay, that's over. And they just started to buy it back. Seems to be the habit, but then again, it always has been there. So unless we get that backed up by, okay, this is happening, and it just kind of, I want to say, gangs up on itself, that I think the market tends to recover off of things without really looking to that there's going to be more. And that's okay because, again, algorithms and options and everything starts trading. And so a lot of the hedges are what produces the market movement and how things get hedged. And so what's trading underneath it. All right, enough said. So how I'm going to leave this, I'm going to leave that there. I'm leaving open the potential that we could rise up, get above, and end up here at 25,262. That's the next irregular B wave fib, and that's 1.382. We hit 1.236, pretty much on the nose today, along with the 100% for wave C. So that's I like it. It's clean. It's very clean, and that would mean that we continue to go down. Again, back to just giving a quick discussion on the alternate, is that and again, just to kind of give you that the background, what it would be is there's minute wave 3. This would show up as minute wave 4. Very shallow, but if necessary, that's going to be what it can be. That is why it's the alternate right now. And so what that would suggest is that we're in minute wave 5 up. And within minute wave 5, I believe because they're threes, it's going to form a diagonal, which means I got to get 3 out of this. And right now it's pretty clean 5. So I might come down a little bit more and then go back up again as this produces an ABC for wave 3. And then we'd be looking for probably up here where this move would be 1.618 times the length of this move. Right, so if this would be wave 1, this would be wave 2. We're looking for wave 3 also to be 3 legs up. And that's the fib that goes along with it. So if that's the case, we might slide a little bit lower, put in the AB of wave 3, and then run back and get up to here. So that's kind of within the alternate, right? So that it would be a diagonal triangle to finish minute wave 5. And here's the deal. It's not just minute wave 5, it's minor wave 5, intermediate wave 5, primary wave 3. All of that follows in succession. It's not like we get done with that and we got to go look to see how the next one's going to be. The minute wave 5 will also in turn complete the minor, intermediate, and primary degree levels. All right, that's kind of where I'm going to leave it. Again, went over the news, what we definitely should see and what we're not going to see, and gamma levels will be updated tomorrow morning. And again, I'll present them as I did this morning, and that is putting more emphasis on the Qs and then also including the indexes themselves. All right, next update tomorrow morning.